Hello, this is Stefan Zotel from Trading Candles, and I thank you for watching our market video today. And for full disclosure, I do have no financial degree or certifications. However, I have been trading for 14 years and have looked at over 1 million charts. And I have learned the craft from some very experienced traders. So I hope this can be some benefit to your education today. I thought I would just start with some economic data, then we could look at a few charts and wrap it up. So this week, the Federal Reserve met on Wednesday. There's been no apparent change in the Fed's posture, which is good. They appear to be flexible in accommodating their policy to ongoing economic conditions. Again, basically that just means they're holding the course steady. And they're keeping the benchmark for raising interest rates at 2%, which we are well below. So to basically sum this up, it's going to create some good stability in the markets because the institutions, the people with the money, they do not like uncertainty, especially from the Fed. The monetary policy really has a big deal in what moves the market. So that should help stabilize us where we are. I don't know that we're going to be going up or down a great bit, but it's beneficial for us. And so we're going to go ahead and move on here to some manufacturing inventory data. Business sales have been up and inventories have been up to keep up with the increasing sales, which has helped the manufacturing sector, transportation sector. Now, recently, consumer sentiment has been going down, and foreign orders are also going down. So I think we'll see some residual strength in manufacturing sectors. However, if the orders do not increase, the consumer doesn't get stronger, there may be some rotation out of related sectors. The effects are usually felt in about 3 months. So if you have profits in this area, maybe you could kind of take some off the table. I wouldn't say you have to, just totally close out all of your positions, but you have profit. It doesn't hurt to put a little in the bank or move it into another area. And finally, for some economic data, let's talk about home sales. And the short-term sales have been up a little bit, but while the longer-term view is down, inventories are increasing and prices are also increasing. So I guess as the price has been going up, people have been trying to sell some of their real estate. On the flip side of that, I guess what you would call the tape side of that, underside, price of lumber has been falling dramatically, and is also accompanied by the Home Builders Association negative sentiment. So the effects of this may reduce home construction, which in turn will affect the labor market. As the home building sector is one of the largest, if not the largest, employer in our country, besides some of the service sectors. And so this actually has a direct correlation to the previous slide we're talking about with manufacturing and sales, because we lose some jobs, so we're going to have a dip in consumer sentiment, which is going to lead to less manufacturing. And again, that will even lead to less jobs. So you've lost jobs in the home sector, and then you're going to lose jobs in the manufacturing sector, and kind of on down the line. Although I don't have any dire predictions, economies fluctuate up and down, and I believe we're just going to kind of continue to move sideways. And just to show you a graph here, these are some existing home sales, the most recent report. And you can see in the last year we have dropped off quite a bit as the interest rates have increased, although I don't know that that has a huge effect on the drop that we've had. But certainly there's been a big increase going on there. And further, if you look at the price of lumber, which here at the beginning of the year has just steadily gone down, and that does not tend well for ongoing building. If home builders think they're going to be building more homes. Obviously, they're going to be buying more lumber, more materials, and that does not appear to be the case. And just an example of some sectors that you may want to look at in terms of what might be affected. It would be a lot of the transportation stocks. So, we have positions in Canadian Pacific Railroad, which has had a nice run here. I have a fundamental price target of 200. That is not a technical target. Technical target would be with this current breakout about 175. So that would put it up here. And again, with 3-month horizon on decline in manufacturing, this could possibly, head up in that direction for a little while longer before it stalls or goes back down. Similar situation here with Union Pacific Railroad. They've been going up quite nicely. Their fundamentals aren't quite as good as Canadian Pacific, but the chart is wonderful, and in the end, I believe the technicals always win over anything. And since Warren Buffett owns railroad CSX, then it doesn't hurt for us to own a railroad. If you look at the ETF for general transportation, that's making new highs. Again, a nice chart. We had some sideways movement in here. Typical market was having some sideways movement, and this is much less volatile, but it has gone up pretty substantially in the last 9 months, from about 112 to 143. So that's a good, maybe what, 15–20% rise. And ETF, that's quite good. And then, of course, you could look at the FedEx, which is bumping its head up here in these highs. I think it will have a hard time breaking through. And UPS, same thing. It's about the same chart. If you look at a couple of these just typical manufacturing stocks and material stocks, the Illinois Toolworks has been doing quite well. We've been holding on to this. Again, that's a fundamental target there of 100. That is not a technical target. And JCI Controls, which is another we've been watching, and that's been kind of drifting down. But a lot of these stocks have been drifting sideways, and they've hit some bottoms, and they're moving back up. As the summer approaches, I would expect the market to slow down a little bit. So those are some things to look at. In general, just some general charts to look at. In terms of precious metals, I like to trade going on silver. We keep purchasing when it gets down here into the 1850 level, and selling on these little pops here. So, and keep selling on these little pops, and buying, keep selling these little pops. So we do have a position in this now, and we'll sell it when it gets back up into here. If it does drop, it may drop down to 16. Not really likely. Now the difference between this and gold, and this is a good trade because it's a steady money maker. You have 1, 2, 3, 4 or 5 entries in the last 9 months where you could pick up, 5% on your money in a month's time, and kind of low risk. Seems to be holding that line pretty well. You look at gold. Gold is just kind of all over the place. It goes down and it goes up, and it's now it's just sideways. There's not a lot of support. Evidence of really strong support here. It could run up, it could run down. You don't know what's going on. For a speculative trader, you could go for it, but in my opinion, it's more likely to head down than up. And I prefer high probability and less volatility for my money. Now, some stocks we've been purchasing and adding to, one is DuPont, that's in the Dow. it just keeps going up, and it's not very volatile. I mean, it's if you take the studies away, it looks a little bit more volatile than it is. It has this beautiful support, a little double bottom, comes up into this ascending triangle here and breaks out and back to the support level here and then runs up. And, 56 to 68, so we have 12 points in 9 months. So that's not a bad return on your money in itself. Put our studies back on here, and if you're wondering, the orange line here is a 125-day moving average, and the yellow line here is a 50-day moving average. So DD's been, just keep adding to it and don't be in a big rush. HBI means underwear, basically. Another one here where we've run from 60 to 84 in 9 months. That's over 30% increase. Beautiful return. And again, fundamental target over here. Anytime you see me right up here, this is a fundamental target of $100. It is not a technical target. Technical targets I draw in with actual numbers. Another good stock to be watching is General Dynamics in the aerospace industry. This is just a beautiful chart. It's just going up, for 87.50 to 115 in 9 months. Now this one I think has reached, pretty good market value. But now you'll see I do have technical targets on this at the 118, 121 level. And as long as the sector itself continues to go up, I am going to trade this as a technical trade, which means I will ride the trend and take some profit when I hit those targets I see, and maybe not hold it as long term. And if you're curious, you can look at the ETF. General Dynamics is in the aerospace, and so look at the aerospace defense sector, and that has actually been going sideways for quite a while. So, General Dynamics is outperforming the industry. We did have some buying in here, looks like on Friday. But, it's good to check the sector you're in. It's better to be in an upgoing sector and an upgoing stock. The rising tide raises all boats. Now, a trade we're looking at is Disney. Now, we actually do have a position in Disney, and you can see back here in November that I put a price target on this at $90, and that was a fundamental price target up there at $90. It was at $72.50. So that would have been another 25% or so increase, and we are now at 83. Now what we have here is potential breakout. We have a strong support here, and if you go ahead and put in the resistance level that we see here, if we can get a break above this line on some decent volume, then we're going to be heading up into this $87, $88 area, again, which puts us up near the $90 area. Now, to add to this chart, most stocks that go over 90 actually go to 100. So I always take that into consideration, and it's a very high percentage, maybe 70% of stocks that break 90 will go to 100. So there could be a whole extra 10 points in there. I might take half my profit off the table and let the rest right up to that $100 mark. But, always consider those things and, always be on your feet. And just a little education here. I wanted to show two things. We had a position in Gilead Sciences, which is a biotech, which we typically don't trade in biotech. It's too volatile, and it's okay if you want to take smaller position sizes and prepare to take a loss or a good win in a short period of time. But you have to have a pretty good stomach if you're going to put a larger amount of money in biotech stocks. That being said, we did take a position in Gilead, basically at the top. And we rode this down, and rode it down, and it made this double bottom here, and then just ran back up. And we sold it here for basically, literally, I think, break even or $3 profit. Now, why did we write it down that far? Because normally we wouldn't write a stock down that far. We definitely would have been out in normal cases somewhere in this area here. Well, the rules we made for this trade, we were going to use our long-term stop. Now, our long-term stop involves a 2-year chart, pretty much this chart, which has a 10-week, 40-week moving average. This is a 49-period CCI and a 30-period DMI. Now, don't worry so much about what these indicators are. You can come to our website or get some personal training. We can explain how these work. And we spent years getting the settings for these to work properly, I guess you would say. To work in our advantage would be more accurate. It's taken a lot of time and a lot of experience and a lot of help from a lot of people. But back to the trade. So the exit of this trade, if we're using this for a stop, where as you can see, it has been above this for the last 2 years, as this is a 2-year chart with weekly candles, so each of these candles is 1 week. So we get our first sign down here where the red crosses the green. Well, that's a sell signal on the DMI. We did not get the same sell signal here on the CCI. It was very close. There would be a red arrow here if we got the sell signal. And the moving average did not cross the longer moving average. So basically what that does is keep you from getting whipsawed, where you would get into a stock and the thing goes straight against you, and then you take a loss and it turns around and runs back up. So we were lucky to have the experience to know when to ride something down and to know, even though I have a fundamental price target on it, fundamentals are not my first inclination to a trade. The chart is that inclination because the chart is telling you what big money is doing. Now, on a similar note, but opposite action, we were holding on to MPEL, which is a casino over in Hong Kong, in Macau. And again, we purchased this pretty close to its high up here. And as soon as we did, bad news came out of the Chinese economy. And at that time, Las Vegas, Sands, and Wynn was going up quite well. But we thought the fundamentals on this were much better than those. So that's part of the reason I chose this, and another example of why technicals rule the day. So when I bought this, I actually put this support line in down here. It's sort of a line in the sand. I thought I could go down that far, and we basically touched that point. And like I said, I put that, I think when it broke this point right here, I went ahead and did our technical measuring and put that price target in. Just for technical measuring, it's amazing how close you get to it. I mean, we just were pennies off that line. So if you take the same stock and use some discipline here on our 2-year exit, which is what I was planning on using for my stop on this, is we had to cross on the DMI, the exit sign with the red line crossing the green line, and we have the exit sign with the red arrow on the CCI, and we had the slower moving average, the longer, the faster moving average, the 10-week moving average crossing the 40-week moving average. Now notice it still never broke my line of support, which was my secondary line in the sand, but we were up for the week, and I'm kind of considering that maybe a gift from the market that, hey, follow your rules, get out when you said you would, and we're up for the week, and we give you a little money back to your pocket. Now, this may keep going up, and nobody knows. However, I followed my rules. We took a loss, but we can put that money to some better use someplace else. And anyway, I think that would be our presentation for the day. We appreciate you coming, and we're going to be presenting these every 2 weeks and posting them on YouTube. You can also come to tradingcandles.com. We will post them, and we will be building some explanation of indicators, some courses, and things of that nature. So again, appreciate it very much, and thank you for your time, and I hope you were able to learn something from this. And feel free to go to our website and email us if you have any questions. We will get back to you.